that's been happening over the last, I'd say, 6 months, where we've seen premiums go down for the first time in about 5 years. And it's odd right now in today's world if you've got a business jet or an owner flown turboprop, and you're not seeing at least a flat or a reduction in your renewal quote. So we've suddenly become somewhat heroes as brokers, delivering positive messages to our customer base. Whereas, like I said, previous 4 or 5 years, it was a struggle.
This is the 21.5 Show.
You're on 121.5, the emergency frequency.
Whether you're a professional pilot or want to be one, you're in the right place.
Let's get started.
Join professional aviators Dylan and Max as they talk their experience in the airlines, business aviation, and more.
Life is good.
Industry experts, unique stories, and plenty of fun. This is the 21.5 Show.
Well, Dylan, our old friend Tom Hauge from Wings Insurance, he's the national sales director there. We have him back on the program to talk about one of our favorite topics, aviation insurance. Welcome back, Tom.
Thanks, guys. Appreciate you having me back on the show. I know it's been a couple of years, and I think I've run into you guys a couple of times during that gap in Scottsdale, but yeah, it's a much happier time, if you will, to talk about aviation insurance than it was a couple of years ago when we recorded. I think it was probably one of your first 20 or 30 episodes. Thinking back there,
been a long time.
Yeah, that was a tough period for us. We weren't highly coveted folks in the industry to speak with at that time. Nothing but bad news, doom and gloom. But that's changed, and hopefully we can give you a little bit of positive here in an overview of the market.
I was just going to say, back then, there was basically the problem was there just weren't a ton of people in the marketplace. Because as you explained, it kind of cycles insurance like it cycles where there's not that many people, so then the prices start to rise, and then as the prices rise, more people back enter the market, which then puts downward pressure on the cost. So we were kind of at that really high point where there weren't a ton of people left in the marketplace as far as insurers, and the premiums were super high. Mm-hmm. And then, so where have we gone from there?
Yeah, exactly. When we spoke, as we talked about earlier, I think we were kind of at the apex of the really tough, hard market times. I mean, premiums were at I wouldn't say an all-time high, but certainly a high over the previous 10 to 15 years. And as we talked about back then, what happens is, certain folks get disgruntled with their insurance policies, and everyone's complaining about high premiums, and then insurance companies that maybe don't write aviation insurance look over the fence and at these high premiums and think there's a lot of money to be made over there. So they pitch their tent and throw their hat in the ring and decide to start underwriting aviation insurance. Well, that's happened over the last, year or so. We've had 3 notable carriers start up business. Eiger Insurance, Rokestone, and recently a company called Class A is going to be starting here probably in the next quarter. So exactly to your point, Max, the market, was pretty thin a year, 3 years ago with carriers. Premiums are at an all-time high, and then the market shifted here in about the last, I'd say, mid 2024. There started to be some, additional carriers sprouting up. And then, as you mentioned, that forces pricing pressure on the legacy or existing carriers. And the only way the new companies are going to write policies is to undercut the competition. So that's been happening over the last, I'd say, 6 months, where we've seen premiums go down for the first time in about 5 years. And it's odd right now in today's world if you've got a business jet or an owner flown turboprop, and you're not seeing at least a flat or a reduction in your renewal quote. So we've suddenly become somewhat heroes as brokers, delivering positive messages to our customer base. Whereas, like I said, previous 4 or 5 years, it was a struggle. Nobody was
Yeah.
immune from, increases in their insurance.
The calls you didn't want to have to make every year when their insurance kept going up.
No,
But
no.
yeah, it's interesting. In my personal experience, just with the business jet insurance, is same whole value from year over, and I was like $15,000 less. It was substantial
Hmm.
between
Hmm.
end of 23 and end of 24, and
Yep.
I was shocked. I mean,
Yep.
like a good chunk of the premium. So,
Yeah,
um,
and to your point, Max, the professionally flown business jets, as you crew, and I think Dylan crews,
Mm-hmm.
those are typically the best risks for insurance companies to underwrite. They typically see the best premiums comparative to owner flown, owner flown turboprops, owner flown jets. They see much better rates, much higher limits of liability, and obviously they typically, and I obviously we can't say that with recent events, but typically they see the lowest accidents and incidents. That's why they again have the sharpest premium rates. But even those policies, Gulfstreams, Challengers, what have you, saw market increases, up from 2018 to, let's say late 22, early 23. And then, like I said, a couple of carriers entered the space and put some pressure on things. And yeah, we've seen business jet policies go down at a rate of 20, sometimes 30+% from last year to this year. So you're in an odd spot if you've got a crewed aircraft, professionally flown nowadays, and you're getting an increase or not seeing some kind of substantial reduction. There's got to
that
be
means what if your
usually if those
pilots just
folks.
turned 80?
Yeah, well, it's a great point. I mean, there's reasons you may not see that, and that could be a senior pilot problem, or it could be a prior loss problem. If you've had a claim in the last few years that was substantial, that could keep your premiums at an elevated level versus what your neighbor might be seeing on an otherwise clean risk. So, all points well noted.
Tom, what about, we saw a real hardening of the pilot requirements in a lot of the policies, used to a lot of times for the SIC, you could just do the 6158 and no sim training. And, all of that went away. A lot of the age stuff, like you mentioned, was tightening. Do you think any of that's going to loosen back up, or do you feel like that's going to more just be the industry standard from here on?
No, great question, Dylan. As with the softening of the market, when I say softening, I mean premiums. There are also softening of those requirements. I wouldn't say so much with the age, more so with the SIC requirements. I get this question quite often. A guy buys a $12, $13 million Phenom 300, call it. It's a single pilot airplane, but they want to fly with a second pilot just for safety reasons or otherwise. And a lot of those guys want to qualify a younger guy that they can transition into the left seat, in 2, 3, 4, 5 years. And we've been pitched pilots with 1,000 hours, mostly Cirrus time, maybe 100 hours in a Baron. And by and large, and I'm not going to say in every case, but by and large, in the last 6 to 8 months, insurers are typically okay with a 1,200 to 1,500 hour total time guy. Maybe he's got a little King Air time, in his logbooks, got a decent amount of multi piston or turbine experience, turboprop, and they've been okay with approving that guy as an SIC following, sim school. There still needs to be a little bit of grease applied when the pilot has lower credentials than that and wants to just do the 3 takeoffs and landings and the 61 55 requirement. That doesn't work all the time. It's probably not going to work in a G700. It's probably not going to work. Obviously, you're not going to probably do 3 takeoffs and landings in that airplane. It probably costs you as much as sending them to school for a sim school class. But the lower whole value airplanes that require a second in command, per the type certificate. When I say lower whole values, I mean, jets that are under 4 or 5 million, G100s and, Lears and Hawker 400s and those type of aircraft where there's really not a good sim program out there for some of those airplanes. And it's very common to have training done in the airplane. It's usually easier to get guys qualified as an SIC, for instance, in those airplanes with the 6155 requirements. And yes, 1,000 hours to 1,500 usually is what the insurers are looking at as a minimum, preferably 3 to 500 multi. But we've been able to get guys approved with less than that in today's market, again, depending on the equipment and depending on the total asset value, i.e., the aircraft's valuation.
So we've seen a softening in the market, like we said, over the last couple of years, but then in the last 30 days, we've seen all of these high profile incidents and accidents that have happened. So is that going to trickle down into the insurance market and kind of stop this downward trend? Or or does it not affect it? Or what do you see happening?
Yeah, great question, Max. Believe it or not, one in every 3 or 4 calls we get to our office from concerned insureds of ours relate to that, or at least are inquisitive about that. And the answer is no. There's really no knee-jerk response. As you know, it takes forever to come out with the NTSB's final findings, right? The preliminary reports are out quickly. The final reports take forever, sometimes a year, sometimes longer. Further, our court system, litigation, that takes sometimes years to get resolved as far as payouts go and lawsuits and everything. So, insurance companies set reserve amounts when they have a claim. So a reserve amount is what they feel that they're going to have to pay out on a loss. Those reserve amounts are typically on the hull. The policy limit for liability is what it is, 50 million, 10 million, 100 million. But as far as the hull goes, they're going to set a reserve amount. So that's going to be something that's determined right away. But those losses that we've seen, obviously the Learjet in our backyard there, obviously the midair was a recent one involving government aircraft and an airliner. But there's not going to be a knee-jerk reaction to general aviation, to business aviation, where we're going to see premiums go up over the next quarter or 2 quarters because of those tragic situations that occurred. Long term, those are obviously the industry has enjoyed a phenomenal safety record up until that point. I think that airline accident was the first since Colgan, was what I heard.
Really? Wow.
Which is 15 years, I believe. First fatality, in-flight fatality of an airliner was the last one prior, I believe, was the Colgan Air ATR or whatever the aircraft was.
Wow. In the United States, obviously.
In the United States, wow. I'm sorry. Yeah, qualify that. And the unfortunate with the Lear, it's mostly property damage. Obviously, we have a fatality involved there with the crew, but there's no third-party liability there as far as bodily injury. It's just a property damage loss to the G200 and obviously to the Lear. And I believe the other folks that were injured will recover. But the end state is this stuff takes a long time to play out, whether it be with the insurers, with the court systems, with the slow wheel that insurance is to turn. So I don't foresee any impact this year, even this year of rates. I mean, if we all of a sudden lost 10 business jets with 8 packs on board, over the next 2 or 3 months, and they were all single pilot operated losses, absolutely, I could see a knee jerk response with the insurance company. But these incidents that we've had, or I shouldn't say incidents, or accidents, there's really not a common thread there. And again, I don't foresee anything changing immediately in the insurance market because of those unfortunate accidents.
I was remembering our conversation from last time, Tom, and the big thing was the reinsurance market getting hit with all of the Boeing MCAS problems, and that was like the big issue. And a lot of that has maybe dissipated, but we do have this war in Ukraine that's still going on. Would you say is that one of the big drivers of problems? Like, is there anything that could happen in the next 12 months that would actually help the market soften even more, or what do you think?
Yeah, great question, Dylan. Obviously, we've got a new administration here, and the MCAS situation was one finger, but a larger finger on the hand with regards to the potential impact on the aviation insurance industry was the war risk and the confiscation of U.S. and non-Russia, non-Ukraine assets. Whether they be airliners or other aircraft that the Russians and I believe the Russians just said we're keeping these airplanes. I think that I had heard a figure over $10 billion in impact on a war risk basis because war risk covers confiscation. So that is something that hasn't been determined yet in terms of how that's going to play out. And with this new administration and the relations possibly changing with the affected countries here with Trump, if by chance there's a release of those aircraft that were effectively lost, that could obviously positively impact our side as far as the aviation insurers go. But I don't, to my knowledge, and we don't get involved too much with airline equipment globally. We do insure some airlines at my firm, but they're smaller, mostly cargo operations. They're not international carriers. But I don't think that's been dispositioned yet. There's a lot of money tied up in the war risk kitty, if you will, as a result of the confiscation of airliners. So I think, to your point, Dylan, depending on how that plays out with our administration and Putin, and if there's some stalemate that's reached, and our lessors and our airlines are able to get their aircraft and their equipment back, albeit probably in a very difficult state, having not been flown for 3 or 4 years now, that could soften or ease the U.S. insurance market a bit with regards to reinsurers and the potential not having to pay out $10 billion plus in claims.
But haven't a lot of those claims been settled at this point? I mean, it's been so long. So aren't those losses been paid out? I mean, they haven't.
No, they haven't. There's been. I mean, you can research this yourself. There's been kind of a stalemate between court systems in terms of should the insurers be forced to pay these substantial amounts of money to the lessors or the owners of the aircraft. There's been arguments whether or not it fit the definition of war risk coverage, and should it be a whole loss or war risk loss, and those two types of losses are reinsured differently. So there's been an ongoing volley, if you will, between the insurers, reinsurers, the court systems, the governments, et cetera. So no, there hasn't been any settlements paid, to my knowledge, to date of substantial amounts of money to the lessors, the owners of those aircraft. And I think it's, like I said, it's still tied up in the court systems and with the insurance companies.
Yeah, that will be interesting to see how that plays out, because say they recover those assets, what state, like how the airworthiness of them obviously is a huge question of how they've been maintained without having manuals and parts, and there could be a huge loss even on an airplane that's still technically flying.
If you think about it, I mean, when an airliner's grounded for a period of time, there's a significant amount of work that's got to go in to make it airworthy. Just look at the airliners that are parked in Marana, during COVID, when they wanted to put those aircraft back in service. You don't just hop in and fly it. There's a lot of work that's got to be done. So, the airplanes that are confiscated may be salvage. At this point, they may not be certainly airworthy or be able to put back into service. And then you got to think about parting out certain assets, and it's a huge mess. I mean, obviously, if you've had your car taken away or any other asset you own for 4 or 5 years and haven't seen it, again, you may not want it back. And if you can settle with your insurance company for a sum of money and not have to take it back, obviously that's at the detriment of the insurance carriers. They're going to be paying out large claims. So I agree. It's going to be interesting to see how this all works out.
Yeah, and then the lessors aren't going to be willing to lease Russian airplanes again. So I don't know that they're just going to give up their airplanes to then have nothing. It's a mess.
Yeah.
It'll be interesting to see how it plays out. We'll talk about it in 10 years when it all's worked out.
Yeah, pencil me in 10 years.
Yeah.
How does it work, Tom? So how does it work? Like, let's say with the war risk, my airplane happened to be in a country, it gets impounded. Assuming that the claim actually pays out, do they just do like a lump sum, like the airplane's totaled, or is it like a monthly, like, hey, as long as you can't get it, like, here's your monthly coverage, or like, how does that work?
No, it's so war risk coverage is a buyback coverage, meaning you can exclude war risk from your policy. Let's just say you own a Phenom, and war risk, let's just say, is a couple $1,000s a year. Most lenders require war risk. I mean, why wouldn't you? It's technically their asset, and they're going to want that thing covered tip to tail for any possible peril it could meet. So if you've got a lien on the airplane, it's usually not an option. But I have customers that own TBMs, Pilatuses, and other airplanes in that class, and they, maybe war risk is a few grand a year for them, and they say, you know what, I don't want to pay the extra $3,000. I'm not going out of the country. No one's going to take my airplane. I just fly from here to there, et cetera. So it's not always carried, but if it's carried, it covers the aircraft for its stated value. So for instance, if you fly the airplane down to Mexico and they think you're involved in some shady activity and you show up to fly home and they say, no, we're keeping your airplane. There's a period of time there, obviously, that needs to go by and elapse. But if it's confiscated unlawfully or lawfully, the insurer's on the hook to pay whatever the stated value is on the aircraft for that type of a loss. So, we haven't personally, we've been in business. Our firm's been in business 41 years now. We have not had a war risk claim to date where an aircraft's been confiscated, but I'm aware of a Gulfstream. I think Gulfstream 4 was confiscated in Africa, South Africa here about maybe a decade ago. And I don't recall the specifics of it, but the insurer had to pay a war risk claim on that airplane. The South Africans kept it for some reason. And again, there was a payout of, whatever the stated value was. So effectively, your airplane's gone. It's insured for, 6 million, 7 million. The insurer's on the hook for that if it's taken and confiscated.
Wow. Just confiscated. Interesting.
Confiscated. Yeah, we don't hear about it often because I don't think it happens very often. But if you're operating into third, and you guys fly business aircraft, and you may get an assignment to go to somewhere in Central Africa or the Middle East or some hot zone or blacklisted country, and it's just nefarious dealings over there. And you could wake up to go home, and the folks, the local folks may just say, sorry, you're not leaving. We think you're involved in this and we're going to keep your airplane. So yeah, it doesn't happen very often here in the US certainly, but externally, that's really the metric you should consider if you are flying internationally or you're flying out of the country a lot, even to like the DR or South America or what have you. You really should consider carrying war risk because you never know what's going to happen in a foreign country. And that's a great testament to to making sure you're insured tip to tail for any possible thing that could happen to you.
But even if you have like very comprehensive insurance, there's always like some standard exclusions, right? Like nuclear exclusion, asbestos exclusion, noise and pollution exclusion. Like, what does that even mean?
So the insurers provide a policy that has, it's called it. I shouldn't say it's like an a la carte, but it's most when your aircraft's insured for all risk, it doesn't mean all risk. To your point, Max, the hull is insured for all risks except war risk, terrorism, whatever it may be. Those policies those coverages you can buy back via endorsement. So for instance, you'll get a quote from your broker that says, hey, your premium this year is $36,000. If you want to buy war risk, it's another $3,000. If you want to buy terrorism insurance, it's another, $800. So you have to buy those additional endorsements to truly have an all-encompassing policy specific to war risk and specific to terrorism. Those are really the two coverages that need to be bought back that are typically not included. Some insurance companies will include terrorism. Old Republic, for instance, I think includes it on all their policies. Other companies may write in war risk as well into the primary policy. So it just pays as a consumer to read the fine print when you get a renewal quote or a renewal proposal from your broker specific to war risk and terrorism. Again, if you're going out of the country, those would be two that would be top of mind to make sure that you have coverage for those. Because again, if you don't want to have your aircraft confiscated in somewhere in some foreign country and find out that you don't have war risk coverage, then you're SOL.
Let's take a quick timeout from our conversation with Ben to talk about our favorite product of 2025, and that is Amigo Aerotows T1. If you listen to our recent conversation with them, it has changed Max's life at the airport. No longer is he struggling to push that 2,000-pound airplane in and out of the hangar. Simply hooks up the T1 now and effortlessly moves that airplane back and forth. If you want to get more information, check out the link in the show notes for Aerotows websites. They have tow that'll accommodate up to 15,000 pounds. And they've got a special offer for our listeners. Use Check out code 21FIVE to get $100 off any product. Scroll down on your podcast app to find the link to AeroTow and check out all of the products they have for pilots. Okay, back to the show. All right, Tom, I want to shift gears for a minute and see if you can just coach us up a little bit. For a lot of us in business aviation, we just have the broker that has been on the plane for forever or with the company for forever. And as our listeners may or may not know, it's not like car insurance when you're shopping for a renewal. You can't go to a bunch of different brokers and say, hey, give me your price. Give me your price.
Mm-hmm.
You know, so you're getting typically one broker is going to quote your coverage every year, and then they'll go to a few carriers and bring it back. For those of us that maybe have been with the same broker for a long time, what should a good renewal look like with the process with your broker? And what would maybe be some things that maybe some signs that you're maybe not getting the best service you could get from your broker? Should I get a quote from every underwriter, for example, or if he or she only gives me 2 or 3, is that okay? Like, just talk us through the renewal process and maybe what we should expect to see.
Yeah, absolutely, Dylan. So generally, to your point, our market, our world is somewhat captive. It's not like car insurance where you can make 400 phone calls today and get 400 quotes from who knows who insurance company, right? There's only right now in our space and we talked about capacity earlier and how the market's broadened a bit here in the last year. There's about 20 to 22 underwriting companies total. Now, if you fly a G700, there's 7. Okay, that's a $75 million asset. So there's only 7 approximately insurance companies that can swallow that type of a whole value. If you fly an old CJ1 at $1.5 million insured value, you're going to probably have 10 companies that can swallow that asset as far as underwrite it. So it just depends on the liability limits you carry. You know, do you carry 300 million or do you carry $1 million? Do you have a hull that's worth 75 million or do you have a hull that's worth 5 million? Those metrics define how many viable insurance companies there are that can bid your policy. So point being, we operate in a very, very small vacuum. There's very few insurers. Again, 20 to 22. Car insurance, there's probably thousands. You could literally call 1,000 auto. Mm-hmm. You could call the General. You could call Allstate. All these guys, right?
There's a lizard. There's a lady with a hat. Yeah, exactly.
Yeah, exactly. So there's just a ton of them. And if you don't value your time, you could probably shop around and spend a day and save $18 on your auto policy, mm-hmm. whatever it may be. But with aviation insurance, it's a much smaller playing field. A very small amount of carriers that underwrite policies depending on your asset. So what I always say when I'm talking to a prospective customer, and it's kind of like what the Trump administration is doing right now, the key word is transparency. At the end of the day, if I'm working or what I would expect from my broker is transparency. Given the fact that we have such a small number of companies that can underwrite your policy, if I'm the customer, I want to know who you went to, what did they quote, and what's my best option. I don't just want to get a quote from my broker I've had for 10 years and say, yeah, we're just going to renew with so-and-so. They've been the best the last decade. Let's stick with them. I want that broker to validate that obviously there's competition in the market. We talked about that earlier. So yeah, I might have been with the same company for 10 years. And trust me, loyalty is important, but there might be a legacy company out there that really wants my business and is going to sweeten the pot and quote my risk, 20% below the company I've been with for 10 years. I want to know about that. I want to know who it is. I want to know how strong they are. I want to know a little bit about their policy form. Do they have broad form policy or do they have just a paper thin, policy where you've got very, very, very thin coverages? Because sometimes, you can get a cheap rate, but what's your backstop look like when you have a claim? It might be very thin, and you may not have coverage for extra expense. You may not have coverage for a rental aircraft or things like that the insurance company carved out to give you a really cheap rate. So to answer your question, you really want transparency. If you're just getting a quote from your broker saying sign here, hey, it's flat this year, that's pretty lazy at the end of the day. You want to have a presentation of such from the broker that educates you on the market, who are the players for your specific asset, who quoted your risk, who's better in the broker's opinion? Because keep in mind, I mean, I've been doing this 20 years. We've worked with all these companies for years. We've got relationships with their, the key underwriting people. I know if I owned a Challenger 300, I know exactly who I'd insure it with. I'm not going to mention a name on the show for fear of being cut off by the industry here. But you know what I mean? The broker should know, playing in this space, who it's just like, a charter operator. You guys are in business aviation. If somebody came up to you and said, hey, I want to charter a Challenger, I can tell you, you guys got your favorites, right? You know who you know which operators are
Right.
platinum Argus. You guys know who does it right, whose pilots are happy, who's all that. You're going to refer them to this company over here. It's the same with aviation insurance. The only thing is, we've got other companies that are bidding these risks, so we need to be the mouthpiece with the customer to say, hey, we got 4 bids here. Here's what I think about these bids. This is the company I feel strongest for you. But Dylan, the process starts for us, it starts about 3 months before renewal. So we send the customer, the typical pilot forms to update, and the application and whatnot. We also ask the customers, specifically more so with the owner operators than with the pro pilots like you guys, but these owner operators are paying a higher rate anyways,
Right.
versus the professional guys. So we try and level that playing field a little bit. So a lot of these owner guys are extremely, extremely accomplished in what they do. I mean, I've got guys that do L39 upset training that get 260 158s a year, that have a flight safety full service contract, that volunteer for PALs and do all this stuff. So, our job is somewhat of a salesman. We want to package that together. And I encourage my customers to put together a white paper of sorts if they're doing a lot of ancillary training and things that would look good on paper. And we put that in with the submission. And again, our process starts about 90 days. And then we collect all this information from the client. We ship it off to the insurance market. Again, if you're that phenom guy, you're going to have maybe 10 companies that can potentially quote your risk. So we know who those are. We send them off. A lot of times we'll have personal phone calls with the underwriters if they have questions about the submission or the pilots and what they're doing. We compile all that information, and then again, transparency. When we go to our customer, we have a presentation to them which shows all the markets we talked to by name, who quoted, who didn't quote, and why. Some of these markets, may not do single pilot over 10 million, right?
Mm-hmm.
So great reason why they decline the risk. The guy has 25 million, or what have you. So we like an educated buyer because it makes our job easier. And if the buyer sees that same transparency every year and knows that, hey, this company won't do my risk because of that, it just makes the process easier. And then ultimately we'll have, some risks. There's only one quote, that's all, because maybe the guy's flying a de Havilland Beaver, on floats, and he bases it at his house, and nobody wants to underwrite that except this one company. There's certain airplane types out there. Experimental turbines are a great example, where you may only have 1 or 2 options. But if you have a mainstream Cessna Mustang that you fly from Scottsdale, and you've got 5,000 hours, and you go to flight safety every year for that airplane, you're going to have 5 or 6 companies kicking themselves trying to write your deal. So you're going to have some good options, which again, back to the point about market pressure, when we have a customer like that, it's very easy to leverage the market when you've got a lot of activity versus the single aircraft guy that, bases the airplane at his house or off a dirt strip, and, very few options. So again, the short answer to your question is transparency. If you're not getting transparency from your broker, if they don't even know what your airplane looks like, you're in the wrong spot. I've assumed business from customers that have told me that. They said, hey, Tom, I fly this, and I don't even think this person knows what the airplane looks like. Why am I working with this person? They don't even know that it's a single pilot type cert versus a 2 crew type cert, or they have no idea that you can only train at flight safety if you want to go in the sim, that kind of thing. So if those questions are met with open eyes or amazement from your broker, you're probably with the wrong outfit.
Hey, Tom, I want to talk about when the worst happens and there's a claim, right? And that's just, somebody hit the wingtip on a hangar, or God forbid, it's, one of your owner operators or ones that have the higher premiums because the risk is assumed to be higher, and they crash. And what's that one? Do these? I've heard that these the carriers actually, some of them at least, farm out the claims process to a third party. So could you speak on that, if that's everybody or only some people, or what that looks like? And I also kind of want to hear about what it's like for you, especially with, I know you do a lot of owner pilot business. So you're dealing with the dude that's flying the airplane and then something happens. Like how involved are you in the claim at that point? And what's that like, being the insurer, knowing these people and stuff like that?
That's a great question, Max. That's probably the number one reason, admittedly, why we get fired, right, wrong, or indifferent, as a broker, because the claim didn't go well, through potentially no input of ours as the broker. We're at arm's length, but most folks remember the fact that they wrote a check for $25,000. And when they have a boo-boo, they want it handled swiftly, without negotiation and without a lot of BS. And if they didn't get that treatment, or somebody drags their feet, guess what happens? The broker gets fired, just because we placed the policy with that insurance company. So it's in our best interest as the broker to make sure the claim process goes well, which requires, what we typically do is we just check in, periodically. If we don't hear anything for a few days, we'll check in with the customer and say, hey, is everyone communicating? Is there a holdup? What have you? And, sometimes there is. Sometimes there's, the claims adjuster's been sitting on their hands, or, they're waiting for somebody that's not gotten back to them. And, ultimately that just makes the person that has a broken airplane more irate, because their airplane's out of service. Now they maybe got to drive or subservice or what have you. So back to your question about claims. The larger insurance companies, the legacy carriers, typically will have in-house claims handling. And my experience is, for the most part, if the insurance company, the Allianz, the Star, the USAIG, the Old Republic, the big guys, the Global Aerospaces, if there's an in-house claims handling person, typically, and I'm not going to say in all cases, but typically the claim process goes smoother. The claims adjusters work for the insurer. It's in their best interest to get this thing fixed, get a great review, get the guy back in service, et cetera. Obviously, there's going to be situations. I mean, there's no perfect claim process for anybody. I mean, there's always going to be a little hiccup here and there, along the way. And even the legacy companies that have in-house claims handling can have challenging claims adjustments and challenging losses. But by and large, that's a question I would ask as a consumer, when, back to your point, Dylan, about the proposal and working with your broker, and my comment about, gauging one insurance company versus the other. That's something that I would ask as the consumer is, if I have a claim, and I've been asked this directly from a client, who would you want to be insured with? And sometimes it's telling. I mean, sometimes you're dealing with a company that uses a contract claims outfit that maybe I, as the broker, had an issue with, 6 months prior on a loss. And the other company is a legacy company that has in-house claims handling and is fantastic. Now I can, add some value to the equation and make a great recommendation on who this gentleman should bind his policy with. But for the most part, Max, we are kept as a broker at arm's length. So if you're towing your airplane out of the hangar and the door's not all the way open and you scrape the tail, and it's a significant enough loss where you want to file a claim, the broker typically, and you can file a claim usually directly with your insurance company. So whoever that is, in the policy, it'll almost always have a claims contact and a direct contact. I encourage my customers to go through me, just so I can monitor the communication and make sure that there's the services there. Because if you if you send a claim directly into the insurance company, which ultimately they're going to get the claim notice, and the broker is unaware, maybe the insurance company never circled with the broker and said, hey, by the way, Max just filed a claim on a damage to his tail. I don't know if you're going to have an issue. I'm not aware. So I like to be in that chain as a broker. I like to be in the loop. That way I can check in on both sides. Hey, how's this going? Any issues with getting this part, or is he going to be back in service soon? Or did we get the final loss notice signed, and did he get his check, and all that stuff. So, but generally once we get the claim notice, a loss report's filled out, it's sent to the insurance company, and they assign an adjuster, just like when you get in a car accident, if you ever have, as an insurance adjuster. The adjuster is the quarterback. and essentially they run the claim from there. The insurance broker is at arm's length. There's some adjusters that are fantastic that'll keep the broker involved in the communications. There are others that treat the broker like a second class citizen and don't communicate. And like I said, it's a situation that can get sideways pretty quick if there's any delay in getting the aircraft repaired, or there's any squabble over the cost, or how much is going to get covered, et cetera. So the claim process itself is probably the number one reason why people fire their brokers, because the broker gets blamed for any issues with the claim. They get thrown under the bus with the insurance company. Even if we did absolutely nothing wrong, I've had people just say, I'm going to go a different direction here. I wasn't happy with so-and-so, handling my claim on my FOD damage I had in my engine. And, you could do everything right as a broker, but you're guilty by association at the end of the day. So it's in the broker's best interest to monitor, we actually have a claims administrator in our company, and her job is to do just that. When we have a claim with a customer, she keeps tabs on the process, the communication. And if we sense even a couple of days where it's dead air, we will inquire with somebody to keep things moving. And so far, it's worked quite well to have an administrator like that.
Makes sense. Let's take a time out from our conversation to talk about another friend of ours, Timothy P. Pope, who's a certified financial planner dedicated to guiding professional pilots through smart financial planning. Whether it's saving for retirement, investment management, a seamless military transition, or strategic tax planning, Tim is your trusted financial partner. Join Tim as he leads engaging discussions on personal finance strategies for professional pilots on the Pilot Money podcast. Timothy P. Pope, helping professional pilots make the most out of life. All right, Tom. Another hot segment near and dear to our hearts right now, these Bush airplanes, these GA Bush airplanes. They're all the rage, but unfortunately, a lot of people may be getting a little over their skis sometimes, doing these stole flights and stuff like that. What have you seen in this market? Is there any change, or is it still pretty high risk?
It is, because even the astronaut out there can ground loop a bush plane. It happens to everybody. I've seen 30,000-hour airline pilots do it. There are some airplanes, as you guys fly tailwheels, that are more prone to ground loop than others. The number one issue with bush planes, if that's what we want to categorize them, is ground loop and gopher holes, or just holes in an unimproved surface that look fine from the air that you all of a sudden buried your, either your tail or one of your struts into. And again, no one's immune to those type of activities. Everyone can have a bad day. Most other airplanes aren't prone to ground loop. Most other airplanes land on hard surface runways, so they're not prone to any damage from rocks or otherwise. But the biggest challenge in insurance for bush planes is experimental. If you have a production tailwheel airplane, take a Husky, for example, production, no experimental, no 51% build, none of that, or 49% build, whatever you want to call it. But those airplanes usually have a pretty good cult following. They're new, they're under warranty. They build Huskies, produce a couple a month. So parts usually aren't an issue. The manufacturer has insurance, if they get dragged into a litigation. So those airplanes usually are fine to insure. The problem is, new Huskies are over $500,000, maybe 600 grand, something like that. I mean, even the Carbon Cubs now are getting up there, and and when you combine a high hull value, let's just call it a tailwheel airplane,
Yep.
A high hull value tailwheel airplane, and those potential loss factors that aren't in play with a Cirrus, for instance, that's based at Scottsdale on a hard surface runway. That market gets pretty small as far as the viable options in the space. So there's still insurance options, but I can tell you right now, if you just got your float rating and bought a brand new Husky on floats and paid 600 grand for it, and you basically have very little float time, you're going to be paying 15 to 20,000 for insurance on that thing first year. It's just, like I said, it's lack of competition in that market, coupled with the high hull value and loss areas of potential loss that don't exist with a Cirrus or a Piper or another fixed gear airplane on a hard surface airport. So I like to close with this, Dylan. Anything is insurable. It's just what it's going to cost, and that cost might not be palatable to certain folks operating that type of equipment, because it is 2x to 3x what a fixed gear airplane would fetch of the same value in some
High
cases.
cost, high risk, not a good combo, huh?
Nope, no. And like I said, you throw in experimental, like I said, and some of these airplanes are experimental. You throw in experimental, and that kicks out some of the underwriting companies that won't do experimental. Period. So even worse, and I know we talked about this on our first segment. We talked about experimental turbine. That's even worse. Lancers, the original Epic LTs. The market for those, there still exists insurance, but it's in some cases it's not palatable for the prospective buyer. It's very high.
So it's funny you bring up the Epic. So because I was just looking at one of those at this air show thing we were at in Buckeye, Dillon, and they had one. And I'm like, that thing is such a cool airplane, but I've heard it's like very difficult to get insured, and it maybe that's just the LT, which was the original experimental. Now the certified one's different. But what are kind of your nightmare like? Well, I guess it's not really a nightmare because you're a broker, so the high premium is actually not the worst thing in the world for you. But I mean, what are the ones that you look at that are tough? Either one that are just really tough to get insured, or that are just like people are going to be pissed because you're going to come back with a very aggressive premium.
Well, truth be told, we love all airplanes. I love the Epic. It's a phenomenal airplane. It's sexy, unbelievable ramp presence, performance is incredible. But you hit it on the head. The LTs, again, experimental, are challenged to insure. The E1000s, on the other hand, are not. Their market right now is no different than an M600 or a Dyer, TBM 960. Difference being whole value only. But Epic has done a tremendous job with the insurance companies. I know they've had a cadre of them up in Bend and had an educational session with them, took them in the sim, took them up on demo flights, showed them the production line. And now when the E1000 first was certified, the insurance was horrible. I mean, I got to be honest, it was not good, especially if you were a transition pilot coming out of a Cirrus and maybe it was your first turbine. The insurance was awful. 75 to 100 grand in some cases for a $4 million airplane. But like I said, to Epic's credit, they did a great job. Really embraced the insurance challenges, and they have a full motion sim in Bend, which the insurance companies love to see. You can't train anywhere but Bend if you have an Epic. So there's not these guys floating out there that insurance approves that allows you to hop in your Epic and train in the airplane. You've got to go to Bend. So insurance loves that captive controlled training product. So they're getting the Epic administered initial and recurrent training. Obviously, it's a certified airplane now. Epic has insurance as a manufacturer. So the E1000 is a complete turnaround in insurability from what the LT was. Present day, and again, I love all airplanes. Some of the other aircraft that have had some challenges, Honda Jet is a good example. I know we had a loss here in Mesa about a month ago, a tragic loss actually, but that airplane is $7.5 million new, and right now if you buy one and you're Dillon or Max professional pilot, no issues with insurance, none. In fact, the insurance product for that airplane is no different than a $7.5 million Phenom. So no issues with insurance, professionally flown. However, owner flown right now in that aircraft, again, new one is $7.5 million. The used ones are trading in the, call it $4 million range. Can be a challenge if you're transitioning into it. When I say transitioning, we're seeing a lot of guys that are coming out of Vision Jets, for instance, or other King Airs or turboprops that don't have jet experience. They maybe have low multi-engine experience. They may have low time, and to get insured in a Honda Jet, because there've been some noteworthy lateral control issues, runway egress issues with that airplane, both professionally flown and owner flown, has proven to be challenging, and it's more challenging if you buy a new one versus a pre-owned one. So that airplane right now specifically, as far as the ones that we have to really grind on when we get somebody to call us and say, hey, we're buying one of these, we need insurance. If the pilot experience is low, it's very challenging. If the pilot experience is high, if it's a former jet owner and he's got a lot of jet time, then not a problem. It's just with the lower time guy, trying to get insured in that versus an M2 or versus a Mustang or something like that. But yeah, that's really right now, those are the only aircraft that I would mention that we see a lot of that are some in certain cases can prove to be challenging to insure.
Tom, what about the
Okay.
MU2? What do you hear about the insurance? What if there's what if it's a professional pilot, lots of jet time, but buys an MU2? What's that look like?
I'm going to throw the Piaggio in there too, Max. Completely different aircraft, and I think the MU2. I think maybe you want one or you're fond of them or something. I think I recall you saying,
Yes.
It's a little thing I
not a
have,
problem, not a problem at all. Again, for somebody like yourself that's got a significant amount of turbine time, turboprop time, jet time, pro pilot type, very easy to insure. There's not a lot of insurance companies though writing them. At the end of the day, that's a 50-year-old airplane, 40 years old, for the newer ones,
Right.
right? 80s vintage. So that plays into things, but it can be a challenge, and SFAR aside, that certainly helped insurability in the MU2 world. It can be a challenge if a guy has got 100 hours in a Baron and maybe 1,000 total time and wants to buy an MU2. He can get insurance, but may not like the cost of that product the first year. So really and same with Piaggio, $2.5, $3, $4 million asset, phenomenal airplane, cabin's incredible, great range. If you like its ramp appeal, it's really leading in class as far as what it'll do. But that is another airplane that can be challenging for a lower time multi-engine, lower time pilot to get insured in reasonably. Again, insurance is available. It's just whether it's reasonable and it meets the expectations of the buyer.
Here's another question I have that I've always thought about, and I'm interested to see what you say. So the person that decides, hey, I'm going to learn to fly, right? They learn to fly, they get their Cirrus, they go to Cirrus school, and they fly around in the Cirrus for a while, and this is great, and they feel comfortable. A couple of years later, now they want to get the Vision Jet, right? And they want to go right from the single engine Cirrus right to the Vision Jet. And I know Cirrus, they do a great job with training, and they kind of have the whole thing. What does that look like from an insurance perspective? Is that one that's really tough, or because it's Cirrus to Cirrus and how they do their thing, is it a lot easier? Or what's your take on that?
Yeah, no, it's a great example of how to do it right from an OEM standpoint. And I'm gonna stroke Cirrus's ego here a little bit. They've done a phenomenal job with the insurance community, and we talked earlier about getting the underwriters into, in Cirrus's case, Knoxville. Taking them into the sims, taking them up on demo flights, giving them technical briefings about the aircraft and what its capabilities are. Most of the underwriters that we work with are pilots, so showing them how easy the transition is from an SR22, NXI into the G3000 and the Vision Jet. So how the buttonology and how everything transfers. So they've done a phenomenal job embracing the insurance community, the insurance underwriting community specifically. So, I mean, we've insured at my firm pilots. I think the lowest time guy we put into a Vision Jet had about 210 hours total time. And he was insured into a Vision Jet. I think he had to do 50 or 75 hours with a babysitter, but he had no problem with his type ride. This was a 50-year-old professional hedge fund manager, breezed through his private and his instrument, brought a brand new Cirrus, and then Cirrus sold him a Vision Jet. And we were skeptical at first, but he was one of the lowest time guys I think Cirrus has typed in the airplane. And he flew it for a couple of years and ended up moving up to a Textron product just due to range and other reasons. But to the point of, you talked about earlier insurability, I think his premium, it was a $3 million airplane at the time. This was years ago, but I think his first year premium was maybe in the 70 range. And then, obviously if he would have kept flying the airplane, it dropped down into the 20 range, after he had, over 1,500 hours. So right now, Max, the apex of Cirrus insurance is around 80 Vision Jet. That's for a real low time guy coming out of an SR22. And if you're a guy like yourself that buys one, you'll be in the 20,000 range on a $4 million airplane. So point being, like I said, Cirrus has done a phenomenal job. It doesn't hurt that they're producing 600 airplanes a year, I think, or something along those lines. 100 plus Vision Jets a year, and there's 11,000 SR22s flying. So the insurance companies are super comfortable. Cirrus pumps a lot of premium into the insurance pool. They've done a phenomenal job with the underwriting companies, and getting them comfortable with the Cirrus, not only the SF50 but the SR22. And we insure student pilots literally every other week in brand new SR22s. It's not inexpensive, but you could be a student pilot and just get your ink wet on your medical there and buy a brand new Cirrus, and you get insurance to fly that thing. I mean, it'll run you about 30,000 first year, but that'll drop down to 10 after you have 400 hours. They're about 350, 400
like
hours.
$1 million haul or something like that.
Million and a half. Yep. $1.5 million. Yep.
$1.5 million is what a new SR22 costs.
Yep. $1.5 million.
Wow. Crazy.
Yep. So yeah, it's the only Achilles heel, and I hopefully I don't get filleted publicly for this comment, but the only Achilles heel with the Cirrus, and it's not with Cirrus specifically, it's with the buyer that has only flown a Piper, a Cessna, or a Cirrus, and then gets a Vision Jet. Well, guess what? A lot of those guys don't have a multi-engine rating and have zero multi-engine time in their logbook. And then they get to 600, 700, 800 hours, 1,000 hours. They still don't have a multi. They still have no multi time. And they say, you know what? I really want to get an M2 or CJ3 or a Phenom. Well, guess what? They're going to get crushed in the insurance market that first year because of that lack of multi-engine experience. So the Cirrus does a great job organically growing you from the SR to the SF. Phenomenal job. Like I said, better than any other OEM out there. But when those guys want to jump ship and do a multi-engine airplane, if they don't have that multi-engine background, that first year is going to be probably pricey, but it's going to be met with a lot more mentoring hours than if they had been flying a King Air for a couple hundred hours or Baron even. Right. So that's what we see a lot, is that guys are coming up wanting to move up in airplanes, and a lot of them don't even have their multi-engine ratings. So that's the only challenge that we see with that single engine crowd, whether it be jet or piston.
All right, Tom, we're going to get you out on this. This was the most popular clip that you did for us a few years ago, and we've had a lot of new listeners since then. So I know you're going to repeat yourself from last time, but I just quickly want, and we don't have to go really in depth, especially for our contract pilots that listen. I always see confusion online posted about, I want to be named insured. I want to be additional insured. What do you want to do? What's a waiver of subrogation? So can you just quickly kind of run through those different terms so that everybody understands what is the difference and what is it as a contract pilot that you would want to look for depending on the situation?
Absolutely. So the easiest way to understand if you're actually insured, meaning you're covered if somebody gets hurt and you're at the controls, the designation has to have the word insured in it, whether it be named insured, additional insured, insured's in that sentence, right? I constantly hear, pilots calling, contract pilots or professional pilots say, oh, no, I'm fine, I'm covered. I'm on the policy as a named pilot. No, you're not covered. All the named pilot designation allows is you to operate that airplane and not invalidate the coverages for the owner or other insured parties on the airplane. So if you're a contract pilot and you're flying, it doesn't matter what you're flying. If you step into somebody else's airplane and accept compensation and move it from A to B, the proper terminology to request from the aircraft insurance underwriter / broker that you're talking to is you want to be listed as an additional insured with a waiver of subrogation. Additional insured, if you can think of it this way, it allows you to piggyback on the owner's insurance. So God forbid the airplane goes off the runway, somebody's hurt, they're obviously going to sue the owner. They may sue the pilot who was at the controls. It's well known that pilots don't have deep pockets. That was a joke. But they may, depending on the pilot situation and the circumstances, they may sue the pilot. And if you are not an insured party on that policy, you're not going to get insurance covered through that policy to protect you, whether it be legal defense or whether it be a settlement that you have to pay to an injured party. So again, additional insured, waiver of subrogation. The waiver just puts a roadblock and doesn't allow the insurance company that insured that jet you just ran off the runway to come after you personally for a loss. So the waiver is critical. Now, in the case of most, and I shouldn't say all, because insurance is not one size fits all, and certain insurance companies may have a different perspective on this exposure and if they're going to charge or not. But by and large, the equipment that you guys fly, Challengers, Phenoms, Citations, whatever they may be, anytime you're flying an aircraft that you don't own, that you're not an employee of, et cetera, you should have yourself listed on that policy. So contract pilots specifically that fly multiple different airplanes, I would not get in somebody else's airplane and fly it unless you get a certificate of insurance that shows John Smith is an additional insured with a waiver of subrogation for pilot services. That's exactly what it should say. And most insurance companies in that class, i.e., light, mid-size, large cabin jets, will provide that to the pilot at no cost. There are circumstances where they may want to charge for it. Again, insurance isn't one size fits all, but by and large, like I said, in that class of aircraft, it's usually issued au gratis, and it's all it needs to do is be requested. But again, named pilot does not mean insured, and that's commonly misunderstood. Having your name in the named pilot section does not conjure insurance to you if there's a loss. It has to have the word insured in the title. Otherwise, there's no coverage for you personally.
I can just see the YouTube clip now. That was perfect. That was perfectly said, Tom.
Okay.
That's exactly what we need to get out there. And then is that something like if I'm the chief pilot and I've got to bring a contractor in, I just call the broker and say, hey, this
Correct.
is what I need? That typically goes through the broker and not the
Yep.
underwriter.
So what typically happens, Dylan, and we deal with this literally every day, somebody will call, say, hey, my guy's sick or he's on vacation. I need to hire an SIC. We got this guy. So what you'll want to tender to the broker is a pilot experience form, which will list his qualifications. It'll list the last time he did CAE for the Challenger, whatever you're flying, and then that gets tendered to the broker. But you also, if you don't ask, that contract pilot's just going to get added as an approved pilot. If you don't ask, or the contract pilot doesn't ask, he's not going to get additional insured waiver. The insurance company's not just going to arbitrarily offer that. You have to ask for it. But in most cases, again, when you explain that, hey, it's a contractor, this is what he requires, he does require to be listed additional insured waiver, it'll be complied with without any hassle.
All right. Max, you got any other questions for Tom before we let him go?
I don't think so. I think I got them all in.
Tom, we certainly appreciate your time. Always love when you come on the show and educate us a little bit. We will have all of your contact information in the show notes if people want to get a hold of you. We'll have your LinkedIn, email, all of that. Any closing words that you'd like to share with the pilot community before we let you go?
No, other than I'm looking forward to being a hero again with the market changing. I mean, it's trust me, it took its toll personally and professionally. Nobody liked the dog. My dog wouldn't even look at me when I walked in the door sometime. But yeah, it's kind of nice now when people are happy again. They're getting their insurance quotes back and they're going down. Even if they're going down a couple thousand, it's certainly much different news than it was for the last 3 or 4 years. So we lived through the hard market. It's refreshing. People are happy again. No one's happy to buy insurance in the first place, but our job is definitely a lot easier when we're presenting good news, which for the most part, that's the rhetoric right now in today's space. So thanks guys. Appreciate you having me on. Maybe we'll see you next week in Scottsdale at the AZBA if you'll be there.
Oh yeah.
We'll be there.
The statements made in this show are our own opinions and do not reflect, nor were they under any direction from any of our employers.